Welcome to Managing Funding Stream. When we first talked about this type of a presentation, we really wanted to be both in terms of tools that you could use and take away with you to help you figure out how best you and your board members could track different grants and income streams and keep clear on what percentages are attached to which grants from which expenses and different programs. But we also wanted it to be from a perspective of planning for how best to manage funding streams. And so that's kind of how Kevin and I have divided it up. I'm going to talk a little bit for maybe a half hour or so. Feel free to ask questions throughout. And this first part is really about how to plan for and think about when you're budgeting, when you're applying for grants, things of that nature, how to focus on that. Just to quickly review the objectives, these are the same as actually what were sent out earlier, and you can see that it focuses on the planning portion and then as well as the tools to help you manage. All right, when I started to prepare for this presentation, I thought it would be interesting to look at it from a grant maker's perspective and then a grantee's or a grant applicant perspective, keeping in mind that funding streams aren't as simple as how much restricted funding you have and how much general operating funding you have. But if you have more general operating, it obviously makes it a lot different or a lot easier to manage those streams because you have greater flexibility in how you apply those funds. So this is from the CEO for Grant Makers for Effective Organizations. They did a survey, and what they found was that foundation leaders acknowledge that unrestricted operating funds were more effective for grantees, but that foundations actually prefer to give restricted grants for programs for very obvious reasons. They prefer those clear-cut results, and they like to show that the foundation has a prominence in a specific funding area. Not in tune necessarily, though, with the needs of applying organizations. But again, it makes sense, right? So then we kind of switch perspectives. And this survey also fully acknowledged that from a grant applicant's perspective, more funds in terms of general operating go to the organizations who are hard at work addressing the social problems or addressing benefits and services or addressing issues that they're in existence to do. So there's an acknowledgement within the funding community that shifting those funds to operating support is a good thing, but that foundations aren't yet willing to do that. So for those of you participating via web, Phil Nash from BLC, Boomers Leading Change, said that he used to work for a foundation, and based on, or various foundations and consulting opportunities, and based on that experience, he said there certainly is a struggle for foundations to address the real needs in terms of unrestricted funding and general operating support for foundations. Can I hear about from the applicant side? What types of conversations have you had with your donors around these things? I know a couple people in the room have not actively applied for grants, and that's okay. But for those of you who have, any thoughts?
Well, I have a nonprofit organization of my own, and I apply for a lot of grants, but they are project specific.
Okay.
So I'm actually applying for money for a specific purpose to deliver a product that the foundation obviously wants, or they wouldn't be funding my organization. So I have not requested unsolicited funds primarily for operational expenses.
Okay, so you've really focused in on programmatic support. Correct. And funding just the core aspects of a program.
Right.
Okay. Penny?
Yeah, that's what Smart Colorado has also done. We have, in our grant process, we have only asked for general operating. We have not been program specific. Now, that being said, it doesn't mean that there are not certain measurements that we expect to accomplish with those general ops. It's not just about the lights and the tables and rent or salaries, whatever. It's about some outcome for what we intend to do with the money. But it's balance. It's definitely, because I've been on a donor advised fund where I made grant decisions for folks coming in, and it's it's a tough sell. General ops is, you don't want to be lost in the minutia. So
Right,
it's a delicate balance, and it's really, to be honest with you, it's about the relationship with your funder. It's really what it is.
Yeah, that's an excellent point. So you heard two very different perspectives. One grant applicant who is solely focused in on a very specific program, has not considered overhead or general operating. And then another organization who has focused in on solely general operating within the guidelines of their mission and focus of what they're doing. So they're talking to the grant makers and foundations about what this general operating support goes to in terms of furthering their mission, but then it gives them greater flexibility to have that impact. Okay. So when you're thinking about the challenges of managing different funding streams, I'd like each of you to really think about your organization and what do you think is the biggest challenge for you, recognizing that it may not be exclusive to one area. Are you unable to accomplish things because too high of a percentage of your funding comes from restricted funds, meaning you feel so attached to those programs that you've applied for, you can't feel like you can expand out to other areas because of the percentage of funding that comes with restrictions? Is this an issue, one of general operating? Many of the projects under the CNDC umbrella only have restricted funding. They have nothing or very little in their 999, their general operating accounts. That can be okay, but it also leads to challenges when you have unanticipated expenses, when you want to consider moving into an office, things of that nature. So is it an issue of you don't have any flexible funding? Or is the issue more of how you plan, budget, and manage your streams? And you can successfully manage diverse funding streams or just grant funds and make things work, but it takes time, effort, and tracking. That's one of the things we hope to help you with today. So think about, is it how I'm planning to finance my organization? Is it how my current budgets are created? Or is my struggle really in how I'm tracking the existing funds that I have? Do I have flexibility? Do I have funds that help move me from year to year, cover my salaries, cover all my overhead expenses while still allowing me to implement the programs? And is it just that I don't feel like I have a good grasp on the funds that I do have? And then the final question to think about, and I'm sure there's other issues that you all could be struggling with, is the issue for greater flexibility, and this kind of goes back to general operating, to allocate funds for new projects or emerging issues that your organization wants. So when you think about those issues up there, what really speaks to you as your own organization's challenge?
All of the above.
Excellent, all of the above. And I think that can be true, especially for newer organizations, as African Leadership Group is. You guys have some solid funding in place. Some of it is very restricted to different grant deliverables that you're working on, but it does give you some flexibility to put some things in place and move forward, especially in terms of future programs. Well, I'll work backwards from what Papa said, but to repeat what he did say for those online, he said not all money is good money because it may come with restrictions in terms of what your organization wants to do. His group has been around for about 12 years, but just recently came under CNDC umbrella and just recently received grants from 2 major foundations here. And what he's discovering is that even though they have these community needs that they want to be flexible and address and respond to, because of the grants he has, they sometimes feel more told by the funders what they're going to spend the money on rather than being able to do that. And that gets into the question, really, of how you're applying for grants. Yes, certainly some of your grants are going to be very program specific, but it's also in your application. So how can you apply for different things, give the funder an idea of what you're going to do, be specific enough, while also being generic enough to have that flexibility to respond to community requests or to address the needs of your community that you're working with. Excellent. Is there one thing that really sticks out that you think is a struggle for your organization. The challenge with grants is if it's not going to start until, let's say, a year from now, and then the grant term runs for, in essence, 4 years from now, or a 3-year grant term, how do you build in terms of programming, but also from a budget perspective, changes that could happen in your organization? Excellent point.
Or in the world.
Or in the world, exactly.
In the world of healthcare.
Right,
Specifically.
right. Great. Any other comments on this? Does any organization here present feel like it's really more about planning, budgeting, and tracking? You feel like you have flexibility in funds? So Henny said she really looks at it as a 3-legged stool, for those of you online, where she manages her funding streams from foundations, from major donors, and then from, I'll say, Joe Schmo Coloradan, who wants to support what she's doing. And what she said earlier is that she focuses on those events, the occasional events, to supplement her 999, but really she likes her preference, and then what seems to work for her organization are those one-off asks for foundations or from foundations, which could be successive years of funding, but may not be depending on the donor. So when we think about planning tools, where's a great place to start? First one is, does your organization have a strategic plan? That strategic plan gives you very specific and broad goals for what you're going to achieve over the next 3 to 5 years, for example. Some organizations have longer ones. Some organizations, depending where they're at in their development, have shorter frames of strategic plan. But that should be the first thing that helps guide your decision in your planning process for applying for grants and managing your funding streams. The next one is a grants management plan, and that's actually the colored handout that's in front of you. It's a tool that some organizations have found helpful. It doesn't help you necessarily say what percentage of this program is being funded by a grant, but it does help you track out and plan the grants that your organization will be applying for in the current calendar year and in future years. So if you have a goal, meaning perhaps from a fundraising plan or a resource development plan, and you know that your goal for your organization is to raise 50% of your operating budget from grants, and that amount is X, you plug that in at the top. And then as you go through and you do your grants research, and you reach out to different foundations to see who might be interested in funding you, then you can plug in the grants that I've submitted, the grants that I'm working on. I've already known I've received X, Y, and Z denial letters or apply again next year, and this tool can help you manage that. Now, I think one addition to this tool that would also be helpful is actually, if you do have very specific programs, that you plug in the program that the grant funds, for example. So if Henny wants to do, let's say, outreach to middle schools, and she's going to submit a grant proposal specifically for that program, she would indicate, for example, on the sheet that she knows this grant application covers this specific program. So this is not a tool to help you necessarily divide up your programs in terms of where the funding is coming from. It could be with a few additions, and we can certainly talk more about that if you think this tool is helpful for you. But this is really more like a grants management calendar that helps you look to the future and say, wow, our goal was 50% of our revenue from grants. I'm halfway through the year. I'm only at 15%. I either better kick it into high gear and get more grant applications out there, or can I look at my existing applications that I'm going to submit, and is it feasible for me to increase the dollars asked for in those applications? If you want to expand your search for corporate sponsorships for government grants, absolutely. Then you just tweak those words to address how diverse your applications are. So Phil suggested what's missing is a report due. A great tool to further help you manage this is when, from those grants that you have received, when are your reports due? Now, CNDC does help you with that by sending out a grant report reminder about 30 days before that grant is due. But if you want to help keep track of everything in a nice, neat little tracking system, then that would be a great addition. Absolutely. Okay, so also thinking about other planning tools, you have existing revenue. How reasonable is it that that revenue is going to go up or be enhanced in the next term? So you really need to think about that. You know, I know BIA, in reviewing their budget, what the project director did is she said, this is all that I'm applying for. In reality, I'm not going to get this, so I'm going to assume I'm going to get 75% of the total grant funds that I've asked for, right? That's a good hedge, right? It would be great if you get every funding application to come back approved at the amount that you did, but you have to be realistic about it. So you have to kind of hedge your bets and then build in other revenue streams from where you're at. So that's one way of looking at it. And the other way is, how likely will you be able to ask for more from the same donor, whether it be a corporate sponsor, whether it be a foundation, whether it be a government grant? And that's an important consideration. For those of you participating online, the question was more about how do you ensure you're performing and reporting back that performance to your funders in order to ensure a positive and productive relationship moving forward, in order to better gauge your reasonable expectation of that funding stream going out. The tricky thing is, a lot of times foundations may not be 100% open with you. They can contact you and you can contact them in the course of your reporting cycle, you know, give them every indication that you're going to be moving forward with another application, even so that you'd like to increase the budget for that application. And they're saying, yeah, sure, great, let's move forward. And then they hit you with, sorry, we know we funded you at $50,000 for the past few years, but due to things on our own end, we're only going to be able to fund you at $25,000. Now, sometimes you can mitigate that by ensuring a strong relationship with your donors, but sometimes in reality, you are not going to be able to do that given, as Phil said, what's going on in the world, right? Good comment. Okay, and that gets into the dialogue with your donors, whether they be foundations or even donor-advised funds. Are you going to talk to them about program expansion? Meaning you funded us at this level for this program for this amount. We'd like to do that same program, but we want to expand it and do it differently, do it more, do it better. Or, it's not exclusive, are you going to talk about the health of your organization and how that impacts delivering those programs that you want to do? Some funders will be open to ensuring that if they fund your infrastructure, and by that I mean not necessarily computers, but your people, what you're doing, your capacity building, your organizational infrastructure, if they do that, won't you better be able to also expand your program and deliver your program better and more efficiently or more robustly, for example? So think about the conversations you are having with your donors. Now, one thing I haven't talked about yet is how do you include your overhead expenses in these conversations? And that's a really important part, and we'll talk about that a little bit more on the next slide. So it would be great to hear from some people about how they've structured conversations with donors, and we'll use that term very broadly, to talk about either program expansion and enhancement and/or could you invest in us so we could do this program better? Have any of you had conversations like that with your donors? Great. So for those of you online, what Ken was saying was that it's easy to have that conversation if the donor is invested in your organization's success. And that's a very, you use the word material part of the conversation. Versus a program that you've had for many years is successful and stable. Obviously, yes, the donor wants to see you succeed, but they might be ready for something maybe with a little bit more glitter, you know, and something different and new, because they know that program is solidly in place. Papa's comment has to do with what I'll call, well, I'll call it mission drift, even though it may not be mission drift, but funders encouraging you to partner with other organizations to implement what you're doing. Sometimes that can be a really, really good thing because in theory, you're sharing resources, meaning internal to the two partnering organizations. Sometimes it can be a very challenging expectation if you've never worked with that organization, if roles and responsibilities aren't clear, things of that nature. Yeah. So some other things to consider when you're thinking about planning is that every organization should be aiming for 3 to 6 months of operating reserves. Why? Because those flexible funds you can dip into in times where you don't have grant funded or other funds to cover you in a time of negative activity, meaning positive activity in program delivery, but negative activity in terms of the revenue coming in. But there's a caution to that. Just because you have an operating surplus doesn't mean you have long-term sustainability. So that operating surplus, and you don't have to get 3 months or 3 to 6 months all at once. It could be a staggered goal throughout the year that when you do get some flexible funds, you tag that for reserves, knowing that you won't dip into it until you really need to based on other financial goings on within your organization. It is a little bit more complicated than that. There should be policies in place around operating reserves. But again, when planning for things, if you can build into your overall resource development plan for the year that you're going to work towards 3 months of operating reserves in 2018, 3 more months in 2019, then you can slowly build up that to have that as a cushion. So I'm going to let Kevin answer that, but for those online, Ken's question had to do with, do you raise so much and secure so much in operating reserves that you're at risk for anything else?
The IRS actually doesn't have a limit on how much you can have in reserve. So a nonprofit can generate as much profit as they want. They can hold on to as much profit as they want. They just can't disperse it out for personal income. So yeah, from a legal and tax standpoint, there is no
red flag.
Yes, Phil.
But a funder could say, you don't need the money.
Right, a funder could say, and you could say, it may not look like we need the money now, but here's our growth plan. Here's how we're going to expand our programs and services. Here's how we're going to expand our staff. Or we're not going to expand, but here's what we want to do to invest in ourselves to make sure that we are better equipped moving forward. You know, I was at GTP's Golden Triangle Partnerships board meeting where we talked about, different ways to involve board members in the fundraising process. And one of the board members said, well, I'm not going to go out there and ask for salary. And you're right. Salary is not an attractive thing to ask for. But you can reframe that. With your donation, that empowers our executive director to go out and have 3 or 6 community meetings or engagement meetings with business owners and community members over the next, month or 2 months or however you want to phrase it out. So you spin your general operating expenses in a way that it's more attractive to donors, but you're still covering what you need to cover. Other thoughts or questions on that? Okay. So keeping in mind that it's not 2 different buckets that you're looking at, planning and budgeting. Obviously, there's some overlap. But then when you think about creating your organizational budget, the first thing you really need to think of is what is your true cost of programming? How much does it cost this organization to do what it is that we're doing? Not just from a program implementation perspective, but also from the perspective of including your overhead into those asks. Do you have certain percentages that you're going to allocate across the different programs? How else am I going to implement that into what I'm doing? And again, this goes back to the dialogue with your donors. The donor may say, we want to give you more money to do this program, but with that more money, we want you to expand into 5 new neighborhoods or 5 different sites. Okay, let's go back to the drawing board. Let me create a budget ensuring that in that program expansion, I've included my additional overhead needs in order to go out to those additional 5 sites. And that's a lot of things that CNDC's projects struggle with is how to include that overhead into a true programmatic budget request or grant request or funding request. Another thing to think about is your cash flow. Map out when you know you're going to get your funds in from committed sources, even anticipated sources, and then plot your expenses against that. Just one example I gave was you can work with any contractors you have to schedule those payments based on when you know that revenue is either going to be coming in or you know for sure will be in. And that's just one example of how you can help manage your expenses going out. Obviously, you're going to have your standard monthly expenses that go, but in terms of different things, unanticipated expenses or even anticipated expenses moving forward, you can work to schedule that. It's a very simple overview of cash flow. And this gets into kind of what I talked about earlier. So you want to enter and anticipate expected dates of revenue, enter that into your tracking mechanism, whether it's a cash flow worksheet or something else, and then plot against your your expenses going out. And then that'll show you where your gaps are going to be. You can do that very high level very easily on a yearly basis. You don't have to get all the nitty gritty, but on a high level overview, you can really see, oh wow, I have my grants come in the first quarter. I have significant expenses in the second quarter, but I'm not going to have another major influx of funding until the third quarter. So how then can you manage that outflow of expenses or bring in additional revenue in that second quarter gap? And then variances in budgets. We all kind of dread them because you think, oh, I did a horrible job creating a budget. Oh, I did a horrible job in terms of my expenses. But variance in budgets, meaning what you budgeted for versus your actuals, can actually be a very important management tool for your current year, but also especially for your next year. So variances aren't necessarily a bad thing. In fact, they can teach you how you need to make adjustments. Was my variance more in terms of timing? Meaning, did I anticipate funding coming in the second quarter? But in reality, it's going to come in the third quarter. Did I put my expenses in January when in reality the expenses weren't going to be in June? And then that can help you better address the changes that you'll need to make in your next year's budget moving forward. So I'm going to see if Kevin has an answer, and I'll chime in as well. But to repeat for those participating online, Phil's question was, how do we budget for staff if the funder says, I don't want to pay for staff, I only want to pay for programming? Obviously, you have to have staff to implement the programming. And then if you have admin staff, how do they fall into the picture?
I wish I had a good answer for this for you, Phil. From an account, this is an area where accounting is really not made to deal with an awful lot of what you all need to do. From an accounting perspective, salary is salary without any differentiation. So there's not a way to split it out in the accounting world. But certainly we could kick out financial statements to you in an Excel format instead of a PDF that could then be manipulated to pull out, oh, yeah, here's how much of that is these people that work on this program that I'm asking for funding for, and here's how much of it is everybody else. And then in notes to funders, that can be included and you can give them a visual that way.
Oh, that's a revelation. Thank you.
It takes a little bit of doing because we're kicking out then payroll reports so that you can know how much is which, but we can give you the bare bones there.
But from a grant application or a funding request, what you want to make sure you're doing is in that funding request providing enough detail which explains why that person is qualified and what specifically they're doing to implement that program. And if that isn't clear to donors, then I think that's an area to enhance. And I would encourage project directors to include part of their salary in those funding requests as well. Because inevitably, while you may not be playing a direct role in that program implementation, You are ultimately responsible for the management. And therefore, you're going to be meeting with your program manager, your program director, for example. You're going to be asking key questions that help them better develop or implement their program. So it's not just the direct person who's working, but it's also the project director or executive director and the role that they're going to be playing in that program. So some common issues that we've seen on our side in terms of CNDC projects and what they struggle with. What happens if you allocate 100% of your staff salaries to grant-funded programs? And then what happens if you get an opportunity to do a fee-for-service? If you've allocated your staff salary to all your grant-funded programs, in reality, how are you going to reallocate that time to any fee-for-service or earned income opportunity? So even though, yes, you want that assurance that your staff salaries are 100% covered by grants, you want a little bit of flexibility to ensure that if an opportunity comes up, especially if your organization is planning for earned income opportunities, that you've provided some space to have that happen as well. Other things, percent of salary in grants. You know, oftentimes we report back 20% of my staff salary went to this grant. But in reality, how do you know?
Build a task plan.
You build a task plan. Excellent. It's important to track that. But think about that when you're making funding requests and reporting on funding requests. If you're saying 20% of this person's staff time is going towards this grant, how are you going to back that up? Do you have the timesheets, and are there other ways of saying that? And I think Kevin's going to talk a little bit more on that later. And then zero-based budgeting. I know all CFOs or all finance directors have a perspective on whether it should be or should not be zero-based budgeting. Zero-based budgeting is when you totally start from scratch, right? You just build your budget up from the ground floor. You start looking at all your programming expenses. You start looking at all your operational expenses, all your staffing expenses, and you just build it up. Some people really like that. To be honest, I don't know what Kevin's philosophy is, whether he thinks it should be zero-based budgeting or not. I think a lot of it can also depend on how your mind processes budgets. To be honest, I don't prefer zero-based budgeting when I'm creating a budget, but that doesn't mean I'm going to immediately jump to my existing budget. I'm going to start with a clean sheet of paper. I'm going to add in all the things that I know that came up over the past year. And moving forward, the changes that I'm anticipating, I create that information and then I include that information back in to what the existing budget was. So zero-based budgeting, think that the previous budget, if you're not going to do flat out zero-based budgeting, think about using your previous budget as a place to start, but it's not the only resource you should be using in creating your budget for the next year. You have to anticipate other things, and hopefully over the course of the year, as an effective manager, you've kind of kept track on issues that have come up and maybe even specific line items that you know need to be readdressed in your budget because of how things have gone over the past year.
I think, as most of you know, next month is the annual budgeting push for us. And so this seemed like a good opportunity to talk about managing funding streams from a budget perspective. Presumably, you all are aware that there are really two different sets of challenges when we're managing multiple funding streams. One is cash flow and one is budgeting. A lot of people try to tie those two things together, and never the two shall meet. They are two separate processes, should be considered separately. If you want to do them at the same time, that's fine, but trying to make those two things mesh together is just about impossible. So you have a budget that ties out to what do you expect your financial statements to do based on your programs and your management and your projections. Then you have a separate cash flow issue. When cash is coming in the door and going out the door has very little to do with when the revenue or the expense hits your financial statements. And so you're really dealing with trying to project two different sets of numbers. But a lot of folks try to make them the same, and that's a bad plan. One of them will be wrong if you try to make them the same. So What we're going to deal with today, really, because we have budget coming up, is the budget aspect of dealing with multiple funding streams. We have a new fangled version of the budget template. We'll call this the beta version. It hasn't been tested particularly well yet, so before I send it out, it'll go through a couple more revisions. But I think it's far enough along that you can get a good visual of kind of conceptually what it is we're trying to work through. Part of the real problem in creating a budget, at least historically for most of our projects at CNDC, when you apply for grant funding and you get your approved grant budget back from the funder, it may have personnel and 8 or 10 other expense lines, and we dump it into the accounting system in one column for the entire period of that grant. And so the intent is for you to be able to measure, I'm 1/4 of the way through this grant, am I 1/4 of the way spent down? Which is a helpful tool to the extent that you're spending ratably, which very seldom happens, right? It might happen for personnel, but it's unlikely to happen for most of your costs. And our budgets don't roll up. So we don't take all of your grant budgets and then just have those all add together to become your overall budget, because you also have to budget for things that aren't grant funded, right? So that really has you doing multiple budgets all at the same time. That can be really hard for people to track who aren't numbers folks. It's fun for me, but I recognize that I am definitely a minority for that. So we're trying to come up with a little bit of a compromise here. So that's what I wanted to show you. So this the new budget has tabs for 10 different grants across the bottom. The intent here is for you to be able to budget each of your grants separately with your expenses in the month where you will actually intend to see them, and then have all of that in one place so that you can roll it up. This at this point isn't set to roll up because I'm pretty good with Excel, but I'm not that good with Excel. So that may be in the next version, but it'll at least all be in one place for you so you can see it. So we're going to put in just a mock one here so you can see how this works, and then we'll talk about a variety of things kind of conceptually. Let's say this is going to be from the Denver Foundation, if I can type. Which I obviously can't. 10 key is fine, typewriter, not so much. So you put in the name of your funder. Under grant type, there's a drop down. So government, foundation, or corporate. Based on what you choose, the template will do a lot of calculations for you. So you want to make sure you choose the appropriate type. For this one, obviously, we're going to select foundation. And then, what's the start month? Obviously, this is not a perfect terminology because your grant could come in June, and it doesn't actually start until July. But for our intensive purposes for budgeting, we're going to say we expect Denver Foundation to start funding us in June. It's not going to end during the year, so we're going to leave that blank. Just like our old budget template, it's got the personnel information, so I'm going to just drop a couple people in here. I had folks in, I didn't realize I deleted them. We'll drop some fictitious folks in there just so you can see what it's going to do. So the next thing that the template wants to know is which of your employees are going to be working on this grant. Whose time is actually going to be sucked into this grant. It bases it on the number off of the personnel tab. You'll see they're all numbered, so you may have to reference back. But we're going to say that we're going to expect the executive director to be putting in 5 hours a week on this particular grant. The program manager to be putting in 20 hours a week, and the admin assistant putting in, doing some sort of reporting, putting in 3 hours a week. So what the template has done is dropped the revenue into the month where you anticipate receiving it, based on silly nonprofit accounting rules that we'll talk about here in a second, and then spread out your personnel. It's assuming personnel is ratably. So if you have some sort of a big variance that you're assuming for whatever reason, you'll have to take that into account. But it's a starting point for a visual. And those of you coming to the budget workshop will hear me talk about this, but I feel like I can never talk about it enough. Revenue recognition rules for nonprofits are ridiculous. There's not really any two ways about it. All of accounting is built on what's called the matching principle. And the idea is to put your revenue and the expense that it takes to generate that revenue in the same period. So if you're, for a nonprofit, that would look like, I'm out, putting on this program that's paid for by a grant, and that month I spent $5,000 to do that, then $5,000 of the grant revenue would fall into that month, and the rest of it would be waiting around to be spent. That plan works so well in the for-profit world that the Financial Accounting Standards Board came along and said, we're going to not have nonprofits follow that rule. No apparent reason. So instead, the rule for nonprofits is any sort of a contribution, and grants follow this rule, is revenue to you on the day you are notified that you are receiving funds, without any regard to when the funds are to be spent, when the program is to be put on. That's it. End of story. So the extreme example is you get a $450,000 grant from, say, the Colorado Health Foundation, and they are looking to pay for $150,000 worth of programming in 2018, 2019, and 2020. They are being very efficient, and they kick out a letter to you on December 31st, the date on the letter. You receive it January 5th. You have $450,000 worth of revenue in December of 2017, for which you will see $150,000 a year of expense over the next 3 years. If that is your only funding source, that means you're going to run a $150,000 deficit on paper for 3 straight years. Right? Stupid rule. Makes no sense, and it drives your board crazy. Particularly if your board is made up of people from the for-profit finance world who can't wrap their brain around why you might have a deficit budget. So all of that is to say, you may very well have a deficit budget, and it's okay to have a deficit budget, as long as the number on the bottom of your financial statements at December 31st, which is your net assets number, is bigger than whatever your deficit is. As long as that's true, you have no problem. And you need to be able to explain that to a funder. And if you need help explaining that, please let me know. It's very common for us to help projects write a footnote to grant applications for why their financials look the way they do. But it's very common. You would expect that program officers at a foundation would look for this in financials. They don't. I don't know. Maybe they all need to take a financial management class somewhere. I don't know what the deal is, but they don't seem to understand it. So that means you have to, and you have to be able to talk about it intelligently. And I think the more confidently you can talk to funders about it, the more confident they are in what you're telling them. So if you have trouble explaining it, their level of confidence is not going to be as high. Okay, that's my spiel on revenue recognition. So let's zoom out a little bit. So then the bottom half of this is just like the regular budget template. It's a spot for you to drop in expenses wherever you think they're going to hit. Right? This is not how we have budgeted grants for you in the past. All you've given us is a total budget. So this is a chance for you to look at that across the year. Calculates the project fee for you, does the whole shoot and match, so you can see what that looks like. On the other hand, let's say you get a DHS decides they're going to fund you. So it's a government grant, and it's going to start in February. So they're feeling generous ahead of whatever the new administration is going to do, so they're going to fund you for $500,000. And on this grant, the executive director is going to work 5 hours a week, and the program manager is going to work 10 hours a week. So, revenue recognition on government funding streams follows actual accounting rules. The reason for that is because you're floating the government the money to do the work that they've contracted you to do, and then you have to wait for them to reimburse you. So because we are essentially cutting them an invoice during the month where you've done the work. So let's say in February here, you go out and you have your 2 people working on this, and they incur $2,800 worth of salary cost. At the end of the month, we're going to generate an invoice for you. As soon as we generate that invoice and it's dated February 28th, the revenue is recognized on February 28th, and you've already incurred all the cost. So by quirk of accounting rule, government money flows the way it's supposed to. So what this is going to do is calculate all the expenses that you put in for any given month and automatically dump that into revenue for you. Those two should tie up. The government grant revenue and expense should be exactly the same thing. So the first one was from Eileen at Colorado Pep Entry, describing the exact scenario that we just talked about. She's gotten the money in one year, she has to spend it in a different year, and so she's running a deficit in the current year. And that can feel really, really awkward when you're out talking to funders, when you're talking to donors. It's kind of just comes along with the territory, to be honest. It's really not. People don't like to see that negative number at the bottom of the budget or at the bottom of their financials, but as long as you have enough assets to offset the negative number, it's fine. It really is fine. There's not a problem as long as you can sustain it, right? If your projection says that you're going to run a deficit budget for the next 5 years, then you might want to rethink your budget and your projections. But partway through a year, it's just not a big deal. I'm going to use our office as an example. Almost all of our revenue comes from project fee. We see about 32% of our total revenue in November and December. So if you look at our financials for the administrative office upstairs, we run a deficit of hundreds of thousands of dollars through the end of October, and then all of a sudden the money floods at the door in November and December, and we get to the end of the year and have a positive bottom. It's the nature of the beast. There's not a way around it unless you have just gobs and gobs and gobs of ownership. It is, the expense accounts happen to be in numeric order because that's what happens when accountants have to play with numbers. So it's down at the bottom. Oh, sorry, the question was, where does the project fee show up? Sorry for the other folks online. So account 6540, and then it drops it in. That's awesome.
Is the idea you're using this for planning or for tracking?
This is for planning. You could certainly have you running a second version of it for tracking. Keeping in mind that we're sending you out financial statements. So to the extent that you're duplicating the work that we're doing for tracking, that's not money well spent, right? I will tell you that you should be signing the contract today on a new reporting platform for financials. It will be an Excel-based platform that will link directly to the accounting database. You'll be able to open up the report and connect automatically to the database and give you real-time financial information. So I am hoping to be able to start rolling it out probably by the end of next month. So, Noah.
Kevin, knowing what I know about the different funding streams for all these different projects in the room, we obviously have foundations, we have individual, whether that be major donors or otherwise. We have corporate sponsorships, we have memberships. So given kind of who's seated around the table, can this spreadsheet be modified to perhaps, let's say, incorporate sponsorships and memberships?
When it goes out, it will. There will be an additional tab added for miscellaneous or whatever you want to use it for, unrestricted funds in general. Whatever you decide you want to use that for, it'll be added before it goes out. So there's also just a general revenue tab and a general expense tab. So those can be used as well. With the reporting thing, I think you will all appreciate when it gets here, we'll be able to build your dashboards and it'll all look pretty and real-time information. So very exciting. So a couple of kind of conceptual things that I really want to talk about because they come up frequently and they can cause a lot of problems. One of them, Emily already started talking about, which is this: how do you allocate time? If you have government funding, it's very important that you know how to answer that question from your funders. Okay? You cannot take government funding and allocate people's time as a percentage. cannot do it. It's against federal regulations. The federal government is reimbursing you for actual expenses that you've incurred. If you book 30% of an employee's time to a grant, but they didn't spend 30% of their time on that grant, now the federal government is paying you for hours either less than the employee worked or hours more than the employee worked. So if you have a federal funder and they ask you, how do you know how many hours your employees enter on their timesheet, the actual number of hours they worked on that grant? That is the answer to the question. So if you've budgeted for, let's say, 20% of your time to be on a particular grant, and in that week or in that pay period, and instead of working 40 hours on that grant, you only worked 15 hours on that grant because you had other things that were calling your time. If we submit a billing to the federal government for that, we're submitting a billing saying you worked 40 hours during this pay period on that grant, when in fact you only worked 15. They're going to be paying you for costs you didn't incur working on their program, which is fraud. So you have to, and you'll notice how I'm phrasing the answer. The answer to the question from your funder is, this is how we do it. We record the actual hours. And there are occasionally federal contracts that will come into us that allow for a percentage of time. But be sure that that's what your actual contract says before you go down that path. The conversation during the desk auditor says. When Emily was talking earlier about the actual cost when you're submitting for the grant proposal, you've got to make sure you include all of that time that you don't think you're going to spend on a grant, but that you actually will. Here's where this becomes doubly important. If you are applying for multiple grants to cover the same person's time, you cannot double dip. Right? You can only bill for 40 hours a week for a salaried employee. That employee works 60 hours that week, you can still only bill for a total of 40 because you're only paying them for a total of 40 if they're a salaried employee. Because managing the grant application for salaries in particular becomes really, really difficult. And so to the extent that you can cover salaries in other ways, or at least leave yourself room, that's very helpful. This is where the grants team back there gets to the end of a grant period, and we are going back and recoding 2 years worth of time because the way it was planned is not what actually happened. So if you realize that's becoming a problem, please let us know as soon as you know. It's a lot easier for us to help you fix it. We're not doing it the last month. The corollary to this that Emily mentioned earlier is if you are telling 3 funders paying 100% of your salary, and we'll assume that you billed all of them for the number of hours you actually worked. And that's true for all of your employees. 100% of their salary is being billed out to funders. And you then turn into a funder a financial statement that shows that you had a fundraiser, or that you did something outside of those 3 programs. That funder is going to say to you, that's really interesting. How did you do that when your staff was all working on these 3 other programs for 100% of their time? This is the problem with billing your funders for 100% of your staff. Your staff is 100% committed to programs. There's no way they can be putting on fundraisers or doing other intangible things. Okay? So that comes up a lot. The other piece that is similar is having your funders ask for your cost allocation plan. I know Phil just ran into this. It's become a very common question that we get when funders are doing site visits. They want to know, when it comes to things like rent and your database and your IT services, how do you know how much of that you are supposed to bill? Okay? The typical answer is, well, that's what you accepted on my budget, so that's what we're billing. But they want to know where you came up with that number. So the most reliable method when it comes to calculating this for your planning purposes is percentage of salary. Your salary is your biggest cost. It should, in theory, be relatively ratable over time. So if a particular grant is paying for 30% of your hours to be worked, if that's what you anticipate, then that grant probably could also pay for 30% of your rent. The other cost allocation can apply to your foundation grants, it can apply to government grants, it can apply to corporate grants. Anything where you're asking somebody to pay a portion of your overhead, you should be able to tell them how you came up with the number you're asking them to pay. And generally, as long as you have some sort of a reliable method that you've used. There we go. Austin's question was, for a line item where the particular usage rate is different than, whether that's employees' time or whatever other factor you're using to allocate, you can absolutely do that line item differently. As long as you can explain to the funder what your rationale was and that it's a legitimate rationale. For things that are not specific to like a designated funding stream, the revenue tab of the budget has all of those lines on it. So I would use that for simplicity's sake. So the question from Phil is, if you change the general ledger accounts that you use from one year to the next, if you compress them, you add new ones, whatever it might be, do you have an issue from an audit standpoint for comparability from one year to the next in your financial statements? From an audit standpoint, the answer is no, because your financial statements aren't audited. CNBC's financial statements are audited. And although you guys are a large project, as a percentage of our total financials, it's still immaterial. So the auditors don't care. Your funders, on the other hand, may be a different story. And there are a variety of things that we can do to help with that. If you have a new, if you have a new structure that makes sense to you, there's a fair amount of manipulation I can do, honestly, of the financial statements in terms of where things are grouped and what they're titled to make last year's look like this year's. So depending on what it is you need done, we may be able to do it that way. The other option is when you're sending financials out to a funder specifically, we can kick them out to Excel, manipulate them, and turn them back into a production. So that happens quite a bit. I will say from a budgeting perspective, there are, I don't even know how many expense accounts are on that, the budget template, probably, what would you guess? 50 at least? Yeah. Which are not, they're way more than that in the accounting system. The more accounts you use, the harder your life is, right? You want your budget to be as simple as you can make it and still be an effective tool for you. We seldom look at your budgets, to be perfectly honest. The only time that we go in and look at your budgets is if you have a cash flow problem, we're worried about whether or not we're going to be able to pay your employees. We're worried about whether or not we're going to be able to pay your lease. We're worried about whether or not we're going to be able to pay your benefits. Then we're looking at your budget to see, is there a timing issue here that we have, or has something gone completely off the rails? Other than that, your budget is free to help you manage your project. So you create it in the way that makes sense to you, and we'll run it. There are very few accounts that we dictate, this is what has to go into that. If something is clearly absurd, I'll call you up and ask about it, but there are very few that we really say, this is all that can go in there. And generally, those are only the accounts that appear directly on the Form 990, where we have to be able to tie them out back to the financial statements. So. Okay, so the good news is we've got these tabs to help you look at each of your grants independently, which will be good. The bad news is I still don't have a way for you to basically lay them over the top of each other and see exactly where the holes are. So that's going to require a little legwork on your end, frankly. The hope is that we've been getting you all of the information in the same place. It's a whole lot less legwork than it would otherwise. For instance, on the expense side, all the expenses would end up summarized here. So you might see that for your entire organization, you have, I don't know, $20,000 a month in contract labor, and you might have enough actual revenue to cover that. But this isn't going to tell you, do your revenue sources line up with your expense sources? Once you've compressed it, you're going to lose that granularity. So then you're going to have to go back to the individual grants to see, right, do I have money coming from the right place to pay the right expense? So in an ideal world, the January staff training number would auto-populate based on adding together the January number for each of those tabs. Biggie obviously is that foundation revenue. If you get a big multi-year grant, that becomes really tough to manage.
What are you seeing as a trend from foundational multi-year? Do you see that still happening a lot?
Actually, I've seen a pretty big increase in
Yeah.
the last probably 4 years, I would say. And I think there are a couple of reasons for that. You know, foundations get to the end of the year and they have a certain amount that they need to distribute to be in compliance. So, which is why our income all comes in November and December, because foundations are figuring out how much they need to push out the door to give to you all. And foundations, frankly, have done really well in the last 4 years of their investments. So they're getting to the end of the year and they have a lot more money to go out the door. So it makes sense for them to push it out in bigger chunks. I also think that there is a bit of a recognition in the funding community that paying for a program for 1 year just isn't really all that effective. Right? By the time you do all of the work and get it up and running, you might get in 6 months, maybe 7 months of really solid programming by the time you've ramped up. And then if the funding goes away, it's not really a smart investment from foundations. And I think there's some recognition brewing of that. Liz asked, we've been getting a very significant increase in requests for projects cost allocation. This is obviously becoming an area of attention for funders. So as you're preparing your budget, it's a really good time to take a look at how are you deciding what's being budgeted where. And if you're carrying forward a budget on a grant from a prior year, whether it's a multi-year grant or it's a federal contract that runs, not congruent with the calendar year, and you can't change what you budgeted for monthly rent, let's say, and you're really just gonna have to take the numbers you've got and figure out where that came from, if you can, or at least what it is, and then make adjustments from there as you're applying for new funding. But this is the perfect time to try and get something in writing, even if it's not perfect, or you know that by the time you're asked for it, it's no longer going to be perfect. And trying to scramble for it when the funder gives you 4 days notice that they need it is pretty rough.
So, as you said, this is a budgeting tool, helps you plan for the next year. And as you advised Austin, you could use it as a tracking tool, but that is also duplicative of what CNDC does. So maybe you can talk to what CNDC does, and then I'll open this up to the grant team as well. Other successes that they've seen on behalf of the projects, what they do to track and manage ongoing grants and expenses.
Sure. So for those of you who don't currently have grants floating around out there, if you get a grant, we send you out a separate statement of revenue and expenditures for each of your grants. And that will show you what you spent this month and where it was coded, what you've spent since the beginning of the grant, where it was coded, how that compares to your budget, and what you have left to spend. So we kick one of those out for every different grant that we have on the books. When it comes to tracking, this is, it becomes a challenge area, certainly, for folks. I really think that the new reporting tool will eliminate a lot of that challenge, because you'll know as soon as you submitted an expense form, as soon as it's approved, and it's in the system, you'll be able to see it on your financials. So without that lag time, tracking should be very greatly reduced. Keep in mind that we don't really book, it's very seldom that we book an expense that you haven't told us to book. Okay? And so you're submitting them, you're coding them, you're telling us which grant is paying for that. Your financials shouldn't contain any information that is a surprise to you, because you have sent all of that to us and you've told us where to put it. So if you get your financials and you say, gosh, I don't know where this came from, then we might have a problem somewhere, either in communication or we've booked something incorrectly, but it really is cumulative of your efforts in sending stuff to us. So Liz, do you want to talk a little bit about what some of your folks do?
From the grants team, we deal a lot with government grants, and restricted grants. So if we receive any restricted grants that have a specific budget, when we're reviewing your expense forms, you have to make sure that A, that expense is allowed on that grant. You have an allowance remaining funds in the grants, because some grants will allow you to spend up to 25% over the budgeted line item without any kind of funder approval. So we'll let expenses go up to the 125% mark, knowing that you'll have another line item where you have to underspend to kind of make it balance. You'll receive an email from my team saying, hey, you have this expense that's been coded to this grant, and this particular expense is not allowed on that grant. So that's your chance for you to see what other funding sources you have and respond to your grant staff accountant to say, you can move it to a separate funding source, or maybe the expense is going to be paid out of your unrestricted funds. So when we are reviewing all that, it's always dictated by the funder approved budgets, and knowing that a lot of your government grants, especially your federal grants, I would say 80% of them have very little leeway or allowances for even going over. And if they do allow up to 10%. And so if you are looking at creating budgets for whether it's funding sources from government or foundation grants, from the personnel side, it's easier for you to have personnel as a bulk or like a sum amount instead of breaking out by position, because once you break out the allowances by position, then every time is coded to that grant and that person's cost is fully spent, even though maybe from the program side, the program manager has an allowance, yet from the ED side, you use 100% of the allowance, then you might find yourself in a position where you have 20,000 remaining on the grant at the end of the grant period, yet you kind of have the ED could not spend money on the grant by 3 months remaining on the grant. You know, so when you're looking at managing or allocating time to your grant, see what kind of allowances that the funder gives you, because if they give you per budget line item, then we'll kick it back to you saying, we can't allow you to continue charging time on this grant because you've used up your allowance. But when you look at your grant statement of activity, you'll see I still have 30,000 remaining on that line item for that grant, but it's because it's by position.
So just as a visual, we have some folks who submit their grant budgets and they break everything out by these line items by person or by position anyway. Or they might do it just for payroll and then lump fringe together, but somehow they're telling the funder, this person, I want this much money for this position and this much money for this position. If you can avoid doing that, avoid it at all costs. It's much easier if you just say, I need salaries and wages of this dollar amount, and I need fringe of this dollar amount. The more general you can be, the more room we have to help you spend all of the money.
So generally in the narrative of that, they're asking, how are you going to do this work? And so you have to say 20 hours lots of time is going to spend is going to do A, B, and C. Can you say that in the narrative, but in the budget, just have the hour blocked out, or the amount, and you're okay with that?
Yep. Okay. If your funder will let you do it, it's much easier. You're much more likely to spend all your money. Similarly, we have folks who we get down to other operating expenses, and they have submitted for $50,000 of just program expense. Okay, well, we can consider just about anything a program expense as long as you actually spent it on providing whatever the program was. So the more general you can be in your applications, the better.
Sorry, just following up on this. So if you're just putting in the payroll amount, do you have to list who may be pulling off of that amount? Or could you get, 3 months into the grant, like, oh, we're going to have this person come in and do this piece?
We have grants that the only description they have of who's doing what is in the narrative.
Yeah.
And as long as there's somebody performing that function and billing their time, they're good to go. We review, well, the grants team anyway, reviews all of your grants every month. So in addition to doing your billings for you, they're looking at all of your temp restricted grants. Are you on pace for spending? Do they need to contact you to reach out and say, hey, you've only got a couple months left and you've got all this money sitting here. Do you have a plan? Do we need to go back and move expenses? So they're really there to be your resource for that. And they, I think, put in a lot of work kind of behind the scenes that you may not know about to help make sure that goes as smoothly for you as possible. I will tell you that for us, I do not do zero-based budget. I take last year's budget, I review the general ledger for each of my accounts, look to see what I think will be different in the coming year, and plan accordingly. That being said, I am likely faster at that than somebody who's not an accountant, just to be honest. So do I think that's necessarily the best way for project to do it? Maybe not. So what I would do, particularly if you have multiple funding streams, is start here. What do I know I have to spend, and what do I have to spend it on? Lay all of those out. Make sure everything's covered, push them together, and see what's left. And what other things do I need to do that I need to pay for, and how am I going to pay for it? After all the stuff that I have to do. If you are, if you've got a grant that's continuing that you operated on last year and you don't see any particular major change coming to any of your funding sources and everything looks like it's going to plow right ahead, then I would take last year's budget, calculate in some assumptions for growth or contraction in the current year, and call it good. We have folks, I kid you not, who spend months and months and months putting together a budget. It should not take that much time. If it's taking you even weeks to put together your budget, honestly, you are in the weeds. There's just no reason to try and be that precise. It just isn't. This is a management tool. This is a way for you to know, are you doing what you thought you were going to do? You don't need to know your personnel to the penny to know whether you are doing what you intend to do. So choose easy. Find a budget and a 30,000 foot view. Obviously, you have to get more granular for grant reporting, and that's fine. But in general, I think people make it a lot harder than.
So we hope that this has given you an overview of parts of budgeting and how budgeting goes into managing your overall funding streams. And I don't want to simplify it down to just being restricted versus unrestricted, but obviously that is a key component. I think the key thing, if you're looking for a sound bite to take away, is diversify your funding streams, and therefore you have greater flexibility. And then when you get to the point of needing to manage multiple grants across multiple programs, then there are tools to help you do that. So we hope this did get you a little bit further along towards better addressing, planning for, budgeting, and managing your funding sources. And then obviously, please feel free to reach out to us on the program side or Kevin's team on the financial side with any lingering questions. So thanks very much for coming.